Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Costa. On today's episode, Johnson & Johnson announcing a spin-off of its orthopedics business. CEO Joaquin Duato shares what's ahead for the pharma giant.
We have a number of important catalysts in our portfolio that are going to drive this new era of accelerated growth.
And amid a ceasefire in the Middle East, President Trump answers questions about a potential two-state solution.
I think the answer is he didn't give an answer. We're just rebuilding Gaza right now.
Plus, it's pub day. Andrew Ross Sorkin's new book, 1929, hits shelves today.
When I first started this, I didn't know if I'd finish it. I didn't know if I'd be able to get the material that I wanted to get.
Well, he did. And he did. A thriller and an historical account of what happened behind closed doors before the big stock market crash.
I was trying in my own way to write the prequel to Too Big to Fail.
It's Tuesday, October 14th, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin. It's book day. Book drops today.
Oh, thank you.
I brought it.
Publication day.
1929.
There it is.
Yeah.
Let's hope it's not. Let's hope it's not. But yes.
I saw a bunch of them.
I mean, we're very
last
happy.
night.
This is
I could have gotten another copy.
You could have gotten another free copy.
And
I'm
sold
waiting
it
It's
for
on.
available
signed
to you.
copy.
Yes, we're going to get you a signed copy.
But today is
So
the
thank
day.
you.
Andrew's book is out, 1929. If you haven't already pre-signed up for it, you can buy it right now. You can get
Thank
it
you.
at bookstores
You
today.
can get it.
We're going to talk a lot more about the book today.
You're very kind.
But it's here.
Thank you.
It is the day. If you check out crypto this morning, you will see that Bitcoin's back at $111,000. And here we go.
There's a fascinating article in the Journal about these two funds, they don't know who, mystery accounts that somehow made out about $160 million by shorting crypto and Bitcoin during that last little drop.
Right.
It was pretty interesting, but it's all apparently a mystery.
And
in
the
terms
amount
of who these people are who did this.
The
And
amount of
did they move it, or were they part of the story, or were they just...
No, a historic crypto sell-off raised over $19 billion, but two accounts made $160 million. It doesn't seem to know who those are, but they, you can watch, I guess, the movements because it's all on the blockchain.
When did they get short?
That was the thing I was trying to look at. They have this chart that shows that $80 million was deposited into account on October 9th, and October 10th, $90 million was deposited into a second account, making a similar short bet, and then finally, of course, the bets paid off.
That's
Because you got to know, I mean, it's a risk-off, still is, obviously, and it's correlated to stocks, but that's a big assumption to think, well, let's see if China's going to do something with rare metals, and Trump's going to do something with 100% tariffs, and that's going to cause the stock market to go down 800 points, and that's going to bring Bitcoin. I mean, that's a big leap. Sometimes people are right. Sometimes I saw that people were talking about that were short the market. See, I don't think it was that profound to be short. Once China did that, you knew there was going to be some type of retaliation. So I don't think that was that hard, although I didn't do it. But we can't.
Got to move fast.
I would have done it if we could.
Well, no, because then you would have thought that the president would have moved against him, but then would have you imagined that he would move the other way, too?
Which way?
Meaning,
do it one way.
You had China make the first move.
Yeah.
Then you had the president say, okay, well, I'm going to go up to here.
Yeah.
And then the market moved against us. And then he said, well, actually, maybe we're going to
Bloomberg had a story
soften
yesterday
this.
that said, is Taco back?
Right. I guess
That's
Taco.
Yeah.
I'll just say.
After Fordo, and I just don't think Taco's really very accurate that he doesn't follow through on things because he's worried. I mean,
he was in the middle of some other things yesterday.
But he definitely
important in terms of world peace.
in terms of trade. Okay, maybe there's some negotiating and bluffing, but in terms of just bluffing, in other ways, I don't think you should always. Iran realized he probably wasn't bluffing.
No, but Besant also said there's probably room for negotiation.
Well, hopefully.
When it comes to China,
It doesn't help anyone
there's
for
room for all of this.
Doesn't help anyone for just
Yeah.
co-embargoes on goods in the two biggest economies in the world.
Let's talk about the latest in economic tensions between the U.S. and China. China sanctioning now 5 U.S. subsidiaries of a prominent South Korean shipbuilder. A spokesperson at China's Commerce Ministry saying that 5 entities have now supported the U.S. government's investigations into the Chinese maritime and shipbuilding sectors. Also today, we should tell you that China is now confirming it's begun collecting additional port fees on U.S.-linked ships. Now, that follows a U.S. decision to hit Chinese ships that are docking at American ports with steeper charges. So a lot of back and forth there.
All right, President Trump making some new comments on the Middle East following his visit to Israel. On Air Force One, heading back to the U.S., he spoke with reporters about calls that leaders have made for a two-state solution and an independent Palestinian state.
I'm talking about something very much different. We're talking about rebuilding Gaza. I'm not talking about single state or double state or two-state. We're talking about the rebuilding of Gaza.
What's the road ahead for governing Gaza?
Well, we'd have to see. I mean, a lot of people like the one-state solution. Some people like the two-state solution. So we'll have to see. I haven't commented on that.
Hard to hear on the plane.
Yeah, a little bit.
So with that in mind, 20 living Israeli hostages were released by Hamas, in addition to more than 1,900 Palestinian prisoners and detainees held by Israel. Israel's defense forces said that 4 coffins of deceased hostages crossed the border from Gaza back into Israel. And at a summit in Egypt aimed at supporting the Gaza ceasefire, President Trump argued the Middle East has a once-in-a-lifetime chance to put old feuds and hatred behind it. So what did he say? We put it in there for a reason. Did you hear what he said?
They were asking him, I think, whether he supported a two-state solution, and I think he was saying, I'm just focused on rebuilding Gaza right now. There are some people who believe in the one state, some people who believe in the two-state. I didn't catch much beyond that, but it sounded like they were pushing him on that, and he demurred, didn't answer.
Because that sounded, that's like running a soundbite from President Xi without a translator. It's like, yeah, that was very helpful. But you were able to...
I could hear that much. I think they were pushing him, but I think the answer is he didn't give an answer. We're just rebuilding Gaza right now.
Cheese will be next.
Coming up on Squawk Pod, Johnson & Johnson this morning unveiling its quarterly financial report and a planned separation of its orthopedics business. CEO Joaquin Duato explains the 2 standalone companies on J&J's roadmap.
Ultimately, it's going to create better innovation for patients and better value for shareholders.
We'll be right back. Welcome back to Squawk Pod. Here's Becky Quick.
And it is a very heavy earnings day. Johnson & Johnson, as we mentioned, reporting third quarter results this morning as well. It beat expectations on both the top and the bottom line. The company also announcing that it's going to be spinning off its orthopedics business, with the transaction expected to be completed within the next 2 years. In fact, I think it's a separation. We're not sure exactly how it's going to be separated from the company, but joining us right now to talk about this and much more is Joaquin Duato. He is Johnson & Johnson's chairman and CEO. And Joaquin, thank you for joining us this morning.
Thank you, Becky.
A lot of news to run through. Why don't we start with the earnings? They were quite a bit better than had been expected, and there was a lot riding on this with the expiration of exclusivity for Stelara. This was a big year, and people were watching to see what you did. So what happened here?
Thank you, Becky. It was a very strong quarter. And it's more than a strong quarter. It's a sign that Johnson & Johnson is entering in an era of accelerated growth. The quarter was very strong. Our growth was 5.4%. We beat analyst expectations both in top and bottom line. We are increasing our full year guidance for revenue and maintaining our elevated EPS guidance. And we answer unequivocally one of the questions that investors were asking from us, which is, can you grow through the Stelara loss of exclusivity and the biosimilar entry? When you look at our growth in our pharmaceutical business, if I exclude Stelara, our growth was 16%. So very strong growth. How we did it? In the pharmaceutical business, we had 11 brands growing double digit. Perhaps the standout is Tremfya, which is the product that operates in the same area as Stelara, that grew 40%. So we think that Tremfya is going to be bigger and better
is that
than
an
Stelara.
Autoimmune disease?
Exactly. It's approved now both for plaque psoriasis and also recently we are in the middle of the launch in ulcerative colitis and Crohn's disease. We also had great results in our medtech business with sequential growth, 5.7% in our medtech business. And we had a standout in our cardiovascular business with 12% growth, with Shockwave, our recent acquisition in calcified arterial disease, growing north of 20% and treating its 1 millionth patient. So as I said, we are in an era of accelerated growth for Johnson & Johnson that we see it lasting for the rest of the decade.
Joaquin, Carvykti, your multiple myeloma drug, just was kind of pointed out by the FDA earlier this week that you have to have a warning label on this now for fatal impact on stomach or intestine issues. What's the impact of that? Multiple myeloma is a terrible disease, but they did see a couple of instances of patients who were taking that who had intestinal trouble that in some cases could be fatal.
Carvykti is a transformational medicine. The growth in the quarter was 80%. When I talk to clinicians, they tell me that the risk-benefit of Carvykti is excellent. Keep in mind that Carvykti is treating patients with late-stage multiple myeloma. Now we have the approval to 1 to 3rd lines prior therapy, and we have overall survival. This is the closest to a cure that you can get. In the patients that were treated in the initial trials, we have about a third of the patients that are living more than 5 years disease-free with a single administration. So the risk-benefit of Carvykti remains strong. We have already 8,500 patients treated. We are unconstrained in supply, and we continue to see Carvykti as the most successful CAR-T launch ever. This is only a sign of our strength in multiple myeloma. Our other standout there is Darzalex, that grew 20% in the quarter. It's our largest medicine today. Today, out of 5 patients, 4 are treated with Johnson & Johnson medicines when they have multiple myeloma. We are not going to stop until we find a cure for multiple myeloma.
Okay. It is a terrible disease. I'm glad to see you making progress on that. Let's talk about the separation of the orthopedics business. Why this business? Why now?
Thank you. We have to be good stewards of our capital, and we have to prioritize Johnson & Johnson to focus in areas where we can identify breakthrough innovation to make progress for patients. And at the same time, we have to be able to recognize where a standalone company may be more able to compete and to win. So orthopedics is such an area. We think a standalone company, a focused orthopedics company, it's going to have the operating model and the ability to be able to drive the commanding market shares that we have today in a market which is more than $50 billion that is fueled by the aging of the population. I think that a focused company will be able to drive better margins and better growth. When it comes to Johnson & Johnson, it also helps our medtech business to move into high growth, high margin areas. Right off the bat, if I take 25 as an example, our medtech business would be able to increase its revenue growth by 100 basis points and its margins by 100 basis points without our orthopedics business.
Why? Oh, your business without that could
absolutely,
do that.
Absolutely.
But this is about 10% of the revenue of the company. It's $9.2 billion for DePuy, and $93 billion that you make annually. So that's a big chunk to slice off. Yeah.
As I said, we have to be good stewards of our capital. We have to be active portfolio managers, recognize and prioritize the areas in which we can bring breakthrough innovation, and at the same time, areas that are going to operate better as a standalone company. This is what we have been doing for a long time. This is how you manage a large company like Johnson & Johnson, and ultimately it's going to create better innovation for patients and better value for shareholders.
Your stock has been on a tear this year. I don't know if we can look at a 1 year or a year to date. For the 1 year, it's up 18%. It's up even more than that over the year to date period. Why do you think that is? Year to date up 32%. What are investors seeing at this point? What are you seeing?
Investors are recognizing that we are in a new era of accelerated growth, which is based on the strength of our portfolio, both in pharmaceuticals and in medtech, and also our pipeline. We have a tremendous pipeline. We just got the approval of a new therapy for localized bladder cancer called Inlexzo that combines our capabilities both in medtech and in pharmaceuticals. It's a targeted release system that delivers a cancer treatment into the bladder. There's about 1 million patients with localized bladder cancer every year. It's going to be, this platform, our next more than $5 billion blockbuster. Also, staying in pharmaceuticals, we just filed for icotrokinra, an oral peptide that blocks IL-23. So far, for treating these autoimmune-mediated diseases, you were using biologics that are injectables. For the first time, you're going to have a medicine that is oral for treating these conditions with a similar efficacy and tolerability than biologic. We think it's going to be our next blockbuster. In MedTech, we continue to progress with our surgical robotic system called Ottava, and we plan to file with the FDA beginning of next year. So we have a number of important catalysts in our portfolio that are going to drive this new era of accelerated growth.
Again, year to date, you're up 32%. It's certainly been some momentum after 5 years of that stock really kind of languishing because of the talc lawsuits that were out there. Can you give us an update on where things stand with the talc lawsuits? I think there was recently a judgment of almost $1 billion made against the company.
Absolutely. And let me use the example of that judgment that you mentioned. We are fully confident that this verdict is unconstitutional and that we are going to be able to overturn it in appeal. But let me tell you, the earlier days before, we had another verdict with the same law firm with a very similar case in which we prevail. That shows
your strategy has been to take on every one of these cases. You're not willing to settle. You're going to fight them case by case?
Absolutely. That shows what I was saying to you, because we have a strong case. We think that what the plaintiff lawyers have presented is fake evidence. We are now looking to our Dauber hearing, in which a federal judge is going to re-examine the fake evidence, the junk science that the plaintiff lawyers are using to base their claims. And we think we're going to come out stronger out of that re-examination of the junk science. We are now back in the tort system. We're going to fight every single case. We have not paid a dime, and we do not intend to pay a dime because we're going to win either in first instance or in appeal. So we are very confident in our position there.
What happened to the settlement that you all had orchestrated at one point?
We have reversed that amount of money that we reserve, and now we are focused on going back to the tort system and fighting every single case.
Wow. Joaquin, let's talk a little bit more about this spinoff of the orthopedics unit, or spinoff separation. You're open to doing a spinoff, but you could pursue other options. Is the business up for sale potentially too?
Absolutely. Our orthopedics business, as I said, it operates in a large $50 billion market. It's a company that it's profitable. We're going to call it the Pew Synthes. That's going to be the name. We're going to appoint an industry veteran as the person who is going to take it to the next phase. And our view is that we are open to different alternatives there. Our preparations is as if it were a spin-off, because that's the longest process. It's going to take 18 to 24 months, but we are open to anything that is going to create shareholder value and is going to take the company to the next level.
Have you had any bids of interest or any calls?
No, I mean, we just announced today. Yeah. This is breaking news. It's only for today, but we expect to have multiple alternatives, and we're going to select what makes more sense for us and creates more value for shareholders.
Protagonist, another company, that stock is up 30% after the Wall Street Journal reported that you were in talks to buy that company. Are you?
We don't comment on these rumors. We have to tell you that we already own the majority of the value of the main asset of Protagonist, which is icotrokinra, the oral IL-23 that I described. We have a great working relationship with Protagonist, and we are very happy with that arrangement. I think this is a sign of how good we are in business development. We signed a global licensing agreement with Protagonist in 2017. It didn't even make the headlines, and now we have a medicine that we have the global rights that is going to be another blockbuster. So it's another indication of how we are able to identify opportunities early on, invest in them, and make big impact on patients and big impact for our investors too.
Joaquin, what would you ask for the Pew? If
we are open to different alternatives.
Just give me a range. Because
I cannot give you a range now. We're open for different alternatives.
Is it worth $10 billion?
I cannot give you a range.
Is it worth more than $3.5 billion? Is it bigger than Bread Basket?
I cannot give you a range.
1998, I think J&J paid. And then we were talking, we remember, because we're...
Investors will value it, and we'll see.
But I think it was $3 billion was what...
The sales
They've got $9.2 billion in sales now.
9.2 in sales, so I wonder... What does an orthopedic company trade at as
for the
price to sales?
It's for the industry.
Price to sales.
The market will value it. We are working as if we are going to...
Well, you made money on it, at least.
Yeah, we make money on it. It's a profitable company.
27 years.
We have been in the orthopedic business for a long time. We have great positions in all the segments of orthopedics, in trauma, in joint reconstruction, in sports, in spine. So it's a very attractive. It's going to be the largest orthopedics company in the world, and it's going to be poised for success.
Who are your big competitors?
The competitors there are Stryker, Smith & Nephew, Zimmer Biomet. That's the area where we compete. And we are convinced that this is going to be poised for success, and there's going to be a lot of investor interest. And at the same time, as I said, it shows that we manage the company for the long term. It shows that we are an active portfolio manager. That's what our investors are asking us. We place Johnson & Johnson in a better place to deliver breakthrough innovation, and we create a standalone company which is going to succeed.
You got a bone saw?
I want, look, we have all type of instruments there.
You got a bone saw?
We have a robot.
He used to bring bone saws in, and he's going to work them. He's going to use them on it.
We have a robot for knee replacement. We are launching a robot for spine, and we have different navigation techniques and software to help in hip replacement and other areas.
Little amazing, whatever you make, like a hip.
We make hips, knees, shoulders, wrists, everything you can imagine, and we have leading positions in all markets there.
Happy Halloween. Joaquin, very quickly, the Trump administration obviously has been very focused on the pharmaceutical industries. We've seen the deal that Pfizer cut to offer cheaper drugs directly to American consumers. Are you in talks to do something along those lines too?
We have been talking to the Trump administration since day one, or I would say even before day one, and we share with them similar goals about making sure that innovation is affordable for American patients, that foreign entities do not free ride in our innovation, that we bring manufacturing jobs into this country, and we announce our $55 billion plan, which is going to essentially make us be able to manufacture all the medicines that are used in the U.S. And I cannot announce anything today. I cannot share anything with you today, but rest assured that we are in direct communication with this administration, and I think we have common ground.
So there's something in the works.
We have common ground.
Well, we hope you'll come back when you have something to talk about with that too. We appreciate your being here today.
Thank you. Thank you, and I'm glad to be here in a day that I can tell you confidently that we are in a new cycle of accelerated growth for Johnson & Johnson, and I think investors are recognizing that based on the strength of our innovation and our pipeline.
Joaquin Duato, thank you. We appreciate it.
Thank you.
Still to come on Squawk Pod, today's publishing day for Andrew Ross Sorkin's newest book, 1929. 8 years in the making to bring us inside the big stock market crash.
The truth is, I kept you in the dark about this project.
I know.
Well, not for that long.
About 7 years.
I thought it was 10.
Part history lesson, part true crime, complete passion project.
If you're a nerd, you might like it because there's lots of endnotes, and hopefully if you like it as a beach read, it's a thriller too.
How he wrote it and what drove him throughout the very lengthy process. That's all right after this. Welcome back to Squawk Pod.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernen and Becky Quick. A lot of big stories. It's also Pub Day, publication.
Taco Tuesday.
Pub Day. They call it Pub Day.
In
the book business.
Really?
Yeah.
Because it means
some people have streamers come down.
It's a totally different thing over in the UK.
Oh, Pub Day. Well, yeah, but on
Much
Pub
better
Day,
thing, I think.
on Pub Day, you could publish your book and you could drink at a pub.
There you go.
Is there something called a pub?
Celebrate.
Is a pub crawl got anything to do with publishing,
party.
or probably not? Pub crawl is from pub to pub. The book 1929 is out today, and I already had my copy. I guess I got an advance copy.
You got an advance copy.
I got an advance copy. It's not signed.
I'm going to get you a
Where's
signed
mine?
copy.
Oh, yours was.
I have mine. You can just sign it.
I can sign it. I want to thank you. Can I just thank you just for your support of this whole thing? And the truth is, I kept you in the dark about this project.
I know.
Well, not for that long.
About 7 years, maybe
I thought
last
it was 10,
year.
almost, yeah.
I worked at it for about 8 years, and I didn't want to tell you that I was working on
I kept asking you
this.
about the TBTF2.
I know, but to be honest with you, when I first started this, I didn't know if I'd finish it. I didn't know if I'd be able to get the material that I wanted to get. I mean, I was trying in my own way to write the prequel to Too Big to Fail, and I wanted that kind of detail, and I would travel all over the country.
Really it's kind of a prequel to that.
It's written, the goal was to try to bring you inside the room of 1929, because I think
and no one's ever done that, which is
we all
weird.
have this general conception something terrible happened in 1929,
Right.
and people look, Kenneth Galbraith wrote a brilliant book. He was an economist.
Yep.
There's a whole bunch of people who have made different types of efforts in the 30s and the 40s. There's a good book that was written in the 70s. But I went on vacation years ago with my wife, like a real nerd, and downloaded all these books to my Kindle and sort of left thinking, I want to know more about these people and what's really happening here. And I don't think I told you what happened, but I was up at Harvard giving a speech, and I got there early, and I'm always late for everything, as you know. But I was there early, so I had all this time to burn, and I went into the Baker Library and asked the archivist if I could look through these documents about Thomas Lamont. Tom Lamont was the guy who ran J.P. Morgan. And she brings me these boxes. I open up the boxes, and inside these boxes are transcripts that Tom Lamont had, that his secretary was keeping, of his conversations with Hoover and Roosevelt. And you could actually see them talking to each other, literally like what they were. And I thought, okay, that's, by the way, what I needed for Too Big to Fail to work, that kind of thing. But back then I could interview the people. And she said to me, Andrew, you can't write this book. This is not really going to work out for you. I read Too Big to Fail. You're not going to be able to get the granular detail. And she was right in that.
The librarian said that?
That's what the archivist said.
The archivist.
That's what the librarian said to me. She said, I read your book. You can't. It's not going to work out for you. And it was almost like a personal challenge when she said that to me, because she was right. There wasn't like 3 or 4 or 5 sort of major archives that I think most historians would, you'd go and you'd excavate the archive. It was like a sort of a puzzle piece situation where you had to go. Oftentimes you'd have to think to yourself, okay, there's this great character, Charlie Mitchell, who runs National City, which becomes Citigroup. There is no archive. There are no diaries of his. They don't exist. And so you'd have to say to yourself, who would he have been corresponding with? Who would have been in his orbit? And then you'd have to go to their archives
to see the letters
and pray to God that there was some letters or other materials from these people. But that was what I was trying to do the whole time. And I would do it on weekends and nights.
Who was he corresponding with? What was your best treasure trove with Mitchell?
With Charlie Mitchell, actually, the best treasure trove turned out to be depositions that were taken during a civil case. So that was the other thing. I made a great mistake in this project. Early on, I was looking at just stuff from 1929, maybe 1930, 1931. You realize, actually, that you had to go and find materials even into the 1950s or 60s, because some people had done oral histories that were in places I didn't even know existed. There was all sorts of material that sort of came out later.
But a deposition from a lawsuit that came later, a civil lawsuit.
A civil lawsuit. There was criminal cases, So all sorts of. And by the way, then you'd see the interview. They'd interview his wife. They'd interview him. And they'd say, "Where were you when this happened? What did you say? What did you say to your wife?" And then they'd interview the wife, and the wife would say, "This is what I said to him." And then all of a sudden you go, "Okay, I have a scene."
Right.
And it's this really interesting story, not just of Wall Street, it's also Washington, because it's actually almost pits Charlie Mitchell against a guy who you all probably know, Carter Glass, who ultimately breaks up the banks. Carter Glass was a senator in Virginia at the time. He was the Elizabeth Warren of his time. And he would rail about this thing called Mitchellism and how he thought that Charlie Mitchell was going to ruin America because of debt and credit and the leverage in the system. So
congratulations on finishing this, but having the vision to go do this and the tenacity to drag out all these details.
Thank you.
And then do it in such a beautiful manner.
Too Big to Fail became a movie.
It did. I think we'll see.
Is that the right?
Could it be a movie? I mean, there have been people.
Limited series type?
We've had a couple, literally in the past couple of weeks, there's been a whole bunch of people who've approached us about different kinds of things.
Amazing.
Maybe you can make a movie, maybe
something that happened that
series.
long ago. It's, you're bringing it back out, and it hasn't really, it needed to be done. I think that's what you thought, anyway, on a personal.
That was my hope. And I hope, by the way, that when people read it, I'm not trying to say there's a crash coming at all, but there are these sort of eerie parallels between things, and I do think there's some lessons embedded in it. I try not to do it with a strong hand. I just try to tell you the story, and then hopefully you can see it. But if you're a nerd, you might like it because there's lots of endnotes, and hopefully if you like it as a beach read, it's a thriller too. So
it's a thriller. But we know
even though you know the ending, there's lots of things that'll shock you, to be honest. I mean, by the way, you have people killing each other. Not killing each other, but killing themselves. There's affairs happening. All sorts of wild things are taking place. So it's kind of fun.
Jesse Livermore, how did he kill himself? Was that a gun or something, or he jumped?
Sherry Netherland.
Sherry Netherland.
Fifth Avenue.
Yeah.
walks into the Sherry Netherland into the cloakroom.
Yeah.
Giving away the ending of the book here.
Yeah, don't do that. But is there anything like the opening scene in Billions?
Is there anything like that? No.
We're back to
No.
in a box again?
No, you brought it up.
No.
Are you talking about when the guy's peeing on
No, I will say this.
the cigar?
My kids
Yeah?
noticed
Okay.
that in Too Big to Fail, there's a lot of F words and cursing.
Yeah.
And they
Not
said,
the case
Dad,
here.
is there cursing in this book? And I said, no, and I hadn't thought about it. And I realized that because they
Much
were
more
writing
civilized
letters,
society.
no, but I think they probably did curse just as much. But they didn't put it in their letters and memos and notes and diaries.
Do we have all the same curse words?
That's a good question. They smoked a lot of cigarettes.
Yeah.
A lot of cigarettes.
Oh, great. The actors will love being in that. They still love smoking in those movies. I think they're clove cigarette. I don't know.
Anyway, the book is out today. It's 1929.
Thank you.
You should get your copy quickly.
That's the podcast for today. Thank you for tuning in. Every weekday morning on CNBC from 6 a.m. to 9 a.m. Eastern, you can catch Squawk Box with its hosts Joe Kernen, Becky Quick, and Andrew Ross Sorkin, who all have projects of their own outside that 3-hour window. Congratulations to Andrew in particular for finishing 1929. To get the smartest takes and analysis from that TV show right into your ears, you can always follow Squawk Pod wherever you're listening now. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.